Randi Dukes with Repeat Realty in the Dallas-Fort Worth metroplex, and we're here today to talk about all things related to lending. So Paula and Travis Bond are joining me. They are loan officers, a husband and wife team with NXT Mortgage, and we're going to tackle some of the questions that everybody seems to have when it comes to the lending process. So I will leave your contact information down below so that if people do have questions after, they can contact you directly. But welcome. Thanks for joining me today.
Thanks for having us. I'm excited. I think this will be really good, really informative, and I'm hoping a lot of people, this will take a lot of the mystery out of what happens when you actually apply for a loan.
Perfect, because I think that is the trickiest part for people. It's not my world, and I know I ask you questions all the time, but I think it really is a confusing part of the whole real estate transaction process. So yeah, let's tackle it. Let's start with the buying process. When I'm working with a buyer and we're looking at houses and then planning to make an offer on a home, they have to have a pre-qualification letter with their offer. So can you talk about the difference between a pre-approval letter and actual loan qualification?
Yeah, I'll be happy to answer that one, Randy. A pre-approval letter is simply a letter that's based upon the credit score of the person who is applying, and it also entails their verbal estimate of their income. And when you go into the full qualification, it has to go through underwriting with all the verification and everything else that's required with that.
Okay, and so when somebody is looking just to get a pre-approval letter, what do they have to supply to you?
They have to give me enough information to run their full credit. So we'll do that, and then from that credit, we can find their liabilities, so we can kind of determine what their debt is as compared to their stated income, and then that's what we base their approval on, is how much they qualify for.
Okay, and how long is that letter good for?
It's a 30-day letter.
Okay, so not long. And I'm assuming if something changes within that 30 days with their income status or job, they have to go through that process again?
That's correct.
Yeah, okay. And so when you're looking at pre-approval for somebody, is there a minimum credit score that you like to see or that you need to see?
It depends on the loan product. There's lots of loan products out there that will that people with their credit scores in the upper fives can qualify for, depending on what it is. Of course, all the way up to 800s. So people that have lower credit scores a lot of times think they can't qualify, but they can, depending on their situation. They just need to get with a good broker and have them look around. That's what makes NXT better, is that we're brokers. So what that means is we have several lenders we can shop for them to find out who will have the best product for their situation and their credit score.
That's good to know, because I hear that all the time, that people with a lower credit score, possibly some credit issues, think that there's no way they can qualify. But there are so many products out there. And I think that's another stumbling block for people. You hear people talking about conventional loans or FHA or VA. How do you decide what the best product is for somebody?
Well, it's really a whole consultative process. We dig in to find out exactly what they're trying to accomplish, how long they want to be into a home, how much down payment they're comfortable making, a large variety of things. And then we go to all of our different lenders, because each of them will offer the different loans. So we have multiple options. And so it's like we find the best fit for the individual customer, it's not a one size fits all process.
And you alluded a bit to this. One of the other things that you hear all the time is you need 20% for a down payment. Do you?
No, you don't. It depends on the loan product, but you can have zero down, all the way up to 20% down. It just depends on the loan product. Like conventional is what most people do. And if they don't want to have to pay private mortgage insurance, then they'll put 20% down, but you don't have to. The private mortgage insurance, so most people want to avoid that. And so to avoid that, they put 20% down on a conventional, and that does it. But they don't have to. I mean, you can get a loan at 0%. There's lots of products out there to do that.
Okay. And so right now, interest rates are all the talk. Almost daily, there's something in the news about interest rates because mortgage interest rates are so low, unprecedentedly low. Can you talk about what goes into being able to seal a really low interest rate?
Sure. Once we get actual approval and not just a pre-qualification, we have the option to lock the rate at any given point in time. And rates fluctuate a good bit. So there's a little bit of an art to finding the exact right time to lock it in. And we do that through consultation with the client. And there's varying different ways that you can even reduce a rate a little bit if the client chooses to do that.
Okay. And so, yeah, that's another term that you hear a lot, locking in an interest rate. And that's something that you counsel the client on as you're going through the process?
Yeah, so what I do usually, it depends on how long we're looking at the loan that he's going to take to get to closing. And so I watch rates every day. And then we kind of determine from there. They fluctuate even during the day a couple of times. And so I get notifications from all of my lenders about what the rates are doing throughout the day. You know, some of my borrowers will say, well, when it gets down to this, this price, then go ahead and lock it in. And so then I'll just watch it every day and then I'll lock it and let them know now it's locked. Also, there's different, you do a 30-day lock or an 11-day lock or 8-day lock. There's all different locks to do. So it's just you just have to know the industry well to know when the right time is to lock for that particular person. And NXT, again, being brokers, NXT is a brokerage firm. And so we can do a lot more than banks and credit unions and places like that can do because you're only dealing with one person when you apply for a loan. So there's great communication between us and our clients. They don't have to go through 15,000 people. They don't have to call a 1-800 number. They get us, they text us, hey, can you lock it in now? 10 o'clock at night sometimes. And so that's what really is a benefit to the client if they go with NXT.
There's a lot to be said for that personal interaction.
Yeah.
One other thing, Randy, on the lock, I think it's important that the buyer's realtor works closely with us so that we can discuss different things that might delay closing. The last thing we want to do is lock something on too short a term and not be able to get to closing before the lock expires.
Right. Good point. And that's another benefit of having a relationship with a lender and the realtor, because I know there are texts going back and forth, emails. When you're working with a bigger company, it's a lot trickier to get that one-on-one communication that is so important in the process.
Yeah.
So another term that we hear all the time are mortgage points or discount points. Can you talk about that?
You're good at explaining that. You want to explain that?
Yeah, I'll give it a shot. It is a little bit confusing. When you think of a discount point, what you're talking about is you're making you're paying a cost to reduce the overall rate over a term. It's almost like prepaying a little bit of interest. And so different loan products have different costs to reduce that rate by whatever percentage. It's not just a straight 1% down buys a mortgage down 1%, but it's another one of those kind of things that you want to work closely with the customer with, because they may have in mind that they only want to do X number of dollars of cash to bring to close. But if they find out that just for sometimes as much as a few $100s, sometimes more, but they can dramatically reduce their mortgage rate over the period of the term, 15 or 20 or 30 years, it makes a huge amount of difference. And so those are, yeah, absolutely. Well, it is a lot of times. It's one of those kind of things you have to take a close look at and make a decision.
Yeah, a case-by-case basis. But you're basically buying a lower interest rate, right?
Depends on where you start. So it's all, so I might have clients that have like an 810 credit score. And then I might have a client that has a 640. Well, their costs are going to be different based on risk, because you have to think about the secondary market. If they're going to sell that loan to secondary, it's got to be a good product to sell. And so they want to have as good of a loan as they can. So sometimes, so the cost will differ depending on that particular client and their financial situation. So it's not across the board. But if you want to talk about in general terms, right now we're doing refis for investment properties in the mid twos. We're doing 15-year term purchase and refis in the high ones. So if you're just talking about basic numbers, those are some good basic numbers to go.
Okay, thanks. And so let's talk about closing costs. What kind of things get rolled into closing costs?
Well, you have all of your title company fees. So those are standard across the board. You have to pay title fees to the company, to the title company. And then you're going to have fees like appraisals and surveys if you have to have those done. You know, and then that's what's called closing costs. So a lot of people get confused about that because I think closing costs are taxes and insurance and all that. Taxes and insurance aren't closing costs. The closing costs are what it actually costs to do the loan.
Okay. And there should be no surprises pretty much, more or less, throughout this process, because there's disclosure at the beginning of the process and the end in a loan estimate and a closing disclosure, right? Can you talk a little bit about that and the timelines on both of those?
Sure. So what we do, I've done this from the beginning. It's just a safe practice and you don't have any surprises. So what I always tell my clients is, here's an estimate of what we're going to be looking at. Fill out the loan application. And once I get the real numbers from liability and all that, then I initiate their loan. And what I will do is I will like inflate the amounts a little bit as far as like what the appraisal might be, or what the survey might cost, things like that. So that at the end, I'm taking money off instead of putting money on. So usually the loan estimate will go out, and then so from the time they start the application and complete it, you have 3 days to get the loan estimate disclosures out to them. So once they get it, they approve it. And then near the end of the process, you kind of keep them up to date as where we are. Hey, you got me your survey, so now I can remove your survey fee. Or, hey, you don't have to have an appraisal, so now I get to remove your appraisal fee. So things like that, borrowers want to hear, not, oh, I've got to tack another $500 on. So we always start the beginning with, let me let you just know, costs aren't going to be this high. We just do this. So when we get to the end, we don't have any surprises. So then when you get to the end, you get what's called a clear to close. Once you get a clear to close, the CD will go out. So the CD has to go out, which is a closing disclosure, has to go out at least 3 days prior to date of close on purchases and refis, unless they're investments, and then the time is a little different for investments. Does that answer your question?
That's perfect. And how long does it typically take to process a loan from the time you first find out that there was an offer made on the house and an executed contract to final closing? What's your timeline typically?
It depends a lot on how responsive the customer is.
Yeah. So basically, I communicate a lot with our clients, and first thing I do is I'll send a note to title, a note to builder if we're building, note to realtor, just so we're all communicating. That really helps get things moving, because then everybody kind of knows what everybody's doing. But basically, we close loans at NXT anywhere from time of application to coming to the table, 15 days to 30. It just depends on the situation. Of course, new builds is 6 months, but if we're talking just regular purchases, 15 to 30 days is a good number.
So right now we're in an interesting climate where a lot of houses in a certain price range are getting multiple offers. They're selling for above asking price. What happens when an appraisal comes back on a home and it's less than the sale price of the house?
We've had this happen. You want to talk about that?
Yeah, there's a lot of different things that can happen. One of the benefits of working with a broker versus some sort of a bank or credit union is because you have that one-on-one relationship. We understand where everybody stands. We also have the ability to appeal appraisals. We have to have documentation and evidence to do that, but we can take the time, and we'll take the time to do that. And sometimes we can get the appraisal adjusted. If it doesn't make up the difference or the delta between the appraisal and the selling price of the home, that's a point of negotiation between the seller and the purchaser. But the loan will not. No lender or investor is going to make a loan for over the appraised price.
Right. That makes sense. And I know, Paula, we've talked before in those situations, I've seen that you will pull comps and go back and battle an appraiser on a price of a home when you think that it is inaccurate. So I love that. You're the full service there.
Well, it's like a dog with a bone. It's like, oh yeah, you think that's what it's worth? Let me show you what it's really worth.
Right.
And that's when it's really important to have a really good relationship with the agent, because you're going to be working with that agent, finding comps and things like that that you can show. And there's a certain way to do it, to show the appraiser, I think we're a little off here. And so you don't get that, with banks. That's why brokers are better. I mean, it's just, I don't know how else to say it. The brokers are just better when you're working with stuff like that, especially.
Well, and I think anytime you can have a personal relationship in the process, it's just going to be so much more smooth.
We get clients that come to us for that reason. They want that personal touch, and they don't feel so lost because they know they can call us anytime. Midnight, probably not going to answer the phone, but they can call us and we'll get right on it. They're not left hanging, having to wait till Monday to see if they can get their answer from a question asked on Friday. So
nobody wants to share their most intimate financial information with a dozen people. And
That's
so
right.
With NXT, that doesn't happen. You've got a single point of contact. You don't have to worry about 15 different processors asking you questions that you've already covered with somebody else.
Yeah, we process our own. I process my own loans. He processes his own. We don't have processors. We do it all ourselves. So that's something that makes us different. One more thing I want to say, if I can. One thing that makes NXT Mortgage stand out above the crowd, other than the things I've mentioned, is we do something called progress over profits. So what that is the profits that we make on any loan, 10% of that we will give away to a charity of the borrower's choice. And so that's not something that I know of anybody else doing. Our broker is awesome. He's just a real giving, just kind of guy. Lots of integrity there. So that we stand out from the crowd.
So key. I love that. And again, I love the personal component. I have worked with clients who have a huge loan company, and trying to get through 47 people to get an issue the day of closing is really stressful. So I would much prefer to be able to shoot somebody a text or have a quick phone call to figure it out.
Okay. And we bring yummy stuff to closing. So if
well, there you go.
Yeah. If you just want yummy stuff, we bring lots of yummy stuff.
We always want yummy stuff. Well, thank you so much. This has been really helpful in giving just an overview of the whole process and answering some of those questions and defining the terms that I think are confusing to people that don't work in it. So thank you both.
Well, great. Thanks, Randi. Thanks for
Randy.
having us.
We appreciate it.